A guy who offered students free Bitcoin. That was in 2014. Imagine what you can do with the cryptocurrency today. MIT student gave away $100 worth of Bitcoin to all undergrads in 2014. Jeremy Rubin was a sophomore studying computer science and electrical engineering when he decided that he wanted to give every undergraduate student at the Massachusetts Institute of Technology $100 worth of Bitcoin. 7 months later, armed with $500,000 in donations from alumni and Bitcoin enthusiasts, Rubin offered to do just that. 3,108 undergrads took him up on it. This was back when the world's most popular cryptocurrency wasn't quite so popular, trading at around $336. Had all recipients of this free Bitcoin let their crypto wallets sit idle, the mid-airdrop collective would have been $44.1 million richer by today's prices. But some students didn't hold on. Researchers tracing the project, including Christian Catalini, now co-creator of the Deem stablecoin project initiated by Facebook, say that 1 in 10 cashed out in the first 2 weeks. By the end of the experiment in 2017, 1 in 4 had cashed out. The experiment creators stopped tracking transactions among the cohort after that. Van Fu, now a software engineer and co-founder of crypto broker Floating Point Group, is still kicking himself for spending a lot of his Bitcoin on sushi. One of the worst things and one of the best things at MIT is this restaurant called Thelonious Monkfish, said Fu. I spent a lot of my crypto buying sushi. Fu wasn't alone in hemorrhaging his virtual coins at this campus dining hotspot. Quantitative trader Sam Trabucco, who also took part in the experiment, estimated that half the people he knew spent their crypto spoils on fish. It was the only restaurant in Cambridge that was accepting Bitcoin at the time, and it was a pretty popular spot, he said. The restaurant has since changed its name and retired its Bitcoin payment policy. The mid-experiment. Rubin was halfway through a protracted legal battle with the New Jersey Attorney General when he first got the idea for the Bitcoin giveaway. And like most 19-year-olds, Rubin was venting to his friends about the fact that state officials had accused him of being a hardcore, hardened cyber criminal who was installing malware on people's computers. But Rubin says he had simply launched a Bitcoin mining program called Tidbit. The project had just won an innovation award at a local hackathon known as Node Knockout. And Rubin, now the CEO of Bitcoin R&D lab Judica, was proud of what he had built. The episode ended up with Rubin being cleared. But as it was happening, he kept noticing the blank stares from his friends each time he mentioned the word Bitcoin. I thought, this is MIT. I thought everyone was super cutting edge. And I realized that no, it really wasn't something that was all that widespread at that point, said Rubin. And so the Bitcoin experiment was born. In late October 2014, Rubin and fellow project leader Dan Elitzer, then an MBA student at Sloan, opened up enrollment. Students who wanted the $100 worth of Bitcoin had to complete a few questionnaires and review educational materials. Jeremy Rubin touring the NYSE during a 2013 internship. We wanted to get Bitcoin out in the world more, and we wanted to spread the technology, said Rubin. We also wanted to study what it means to distribute a new asset. Students wanting to take part also had to set up their own crypto wallet, which at the time was hard enough to discourage participation. Still, in the end, 70% of students ended up jumping through all the hoops. Fu was among the students who started a side hustle opening up crypto wallets for those who didn't want to spend the time figuring out how to do it and were willing to yield a percentage of their Bitcoin as a fee for services rendered. A lot of the students would pay the other students half of the Bitcoin if they would set it up on their behalf, explained Fu. He says he helped somewhere between 10 to 12 people set up crypto wallets in exchange for a commission paid in Bitcoin. It's somewhat taken the sting out of the fact that he spent $100 worth of Bitcoin, worth more than $14,000 today, on 2 sushi dinners. Trabucco says that back when he was a student, he didn't think that much of the project, though he did manage to triple his Bitcoin handout playing poker online. Half the people I knew actually registered it as an event, said Trabucco. As far as he was concerned, he thought Bitcoin was cool, but didn't really think it was going to be the future of finance. Fu, Rubin, and Trabucco all declined to share how much they kept and how much crypto they've accrued since their days on campus. Massachusetts Institute of Technology MIT campus in Cambridge, Massachusetts, where all the Bitcoin went. When CNBC spoke to Catalini, he was taking a walk to break up the 12 to 14 hours a day he spends on Zoom working at Facebook. Among Catalina's lasting takeaways is the fact that Bitcoin simply didn't work as a method of payment on campus. Even at the time, the technology was quite user-unfriendly, he said. Even within a pretty tech-savvy community such as MIT, it was kind of surprising to see how much work it really was to use Bitcoin at the time. But that inability to spend was probably for the best. What was fascinating is that in a sense, the MIT students got it right. The vast majority held onto their Bitcoin as an investment, And maybe it sounds obvious given the price has appreciated so dramatically. But I think in 2014, it wasn't clear at all that something that was worth at the time, I think $250 would be worth more than that, he said. The Dutch family that invested half of their net worth in Bitcoin, making money off cryptocurrency #cryptocurrency. Dutch family makes fortune in Bitcoin after investing everything. Didi Hadutu, the head of a Dutch family that sold every single cent it had and bought into Bitcoin in 2017, is now living the high life, having taken advantage of a very risky investment and winning big. Now a motivational speaker who travels the world with his family and gives talks as a motivational speaker. The investor gambled literally every penny his family had in savings, and is living proof that sometimes these types of investments can indeed pay off. Grecian Delight supports Greece, liquidating all of the assets he and his wife and 3 children owned in 2017. They invested in Bitcoin, hoping that the cryptocurrency would hit the big time. Bitcoin was at $900 in 2017, now over $47,000. At that point, the price of the digital currency was $900, despite nearly continual fluctuations in its valuation, fueled by celebrities and business leaders who are either backers of Bitcoin or who think it is a scam. In the words of former U.S. President Donald Trump, it currently tops a cool $47,000. The money the family has made from Bitcoin investment has forced them to hide their wealth in 4 safes, located all around the world, for security. Interviewed by CNBC, Hadutu explains his methodology for safeguarding his enormous fortune. I have hidden the hardware with the digital wallets in different countries so that I never have to travel too far to access one of them and exit the market if necessary. He says, Tehutu and his family are now commonly referred to as the Bitcoin family. They have a Facebook page that shows Diddy posing in all manner of exotic locales all around the world, from tropical beaches to mountain lakes to elegant cities, frequently pictured in various t-shirts sporting the Bitcoin logo and others, which say things like #believe, #hodl, #buy, and so on. The family is living proof that investment pays off if it is timed just right. But they are not overly materialistic, as Hadutu explains to interviewers from CNBC. He tells interviewers that the family has 2 secret locations in Europe, 2 in Asia, 1 in South America, and a 6th in Australia for the safes that hold their treasure. They sometimes rent apartments, or use friends' houses or makeshift warehouses for their storage needs for their hoard. I prefer to live in a decentralized world, and in such a world I have a responsibility to protect my capital, says Tehutu. Losing parents, workaholic lifestyle prompted sea change. Before he made this enormous life transformation, he was a professional soccer player and attended school to study finance. His mother suddenly died when he was 24 years of age, prompting him to become a workaholic to deal with that sorrow. For the next few years, he devoted his entire life to work after the loss. A few years after that, Hadutu lost his father as well, to cancer. He had taken care of his father for the last months of his life. He says his life collapsed at that point, and he relates to CNBC that he then told his wife that he couldn't go on like this. He hired a manager to run his company and took a trip to Indonesia to clear his head. In Bali, he received a call from a man who asked him to invest in Dogecoin. After seeing how well that cryptocurrency was performing, he was persuaded. Incredibly, they returned to Holland and sold everything they had to invest in the alternative currency. Part of their impetus is to show the world that a new monetary system is possible, outside the conventional one, run by bankers and the financial giants. Despite the pitfalls posed by the many ups and downs of the cryptocurrency, Tehutu says he has no regrets. Accumulating money shouldn't be the goal in life, he tells his children. Adding accumulating happiness should be the goal. He gives large amounts of money away to charities all around the world, showing his children how much more meaningful it is to give rather than to receive. Even if they should eventually lose everything in more downward cycles, he says, he fears nothing, and his family would simply start all over again. For now, the family travels the world, living a minimalist lifestyle without a fixed abode or vehicles, telling others that their dreams as a Bitcoin family have come true. How do XRP and Bitcoin compete against each other? Coinstar did $1 billion on their platform last year and are in the prime position to attack crypto right now. XRP closing in higher than Bitcoin on this metric is a rare phenomenon. XRP's fall that took the alt's price from its all-time high of $3.31 to under $1 shook its investors and traders. However, this rally came as a sigh of relief to these investors as the alt's price rallied almost 40% in a week. Oddly, Bitcoin, Ethereum, and even BNB had registered lower price gains as compared to XRP, which was one of the top weekly gainers at the time of writing, second only to Cardano. While the XRP traders have a lot of cheer about as the alt finally reclaimed the $1 mark for the first time in 10 weeks. It'll be interesting to see how this price rally unfolds for the alt that dropped more than 80% in the last cycle. Finally, high market value for XRP. A month ago when XRP oscillated close to 50 cents and made headlines, but not about its price gains or metric tops but about the SEC versus Ripple case. The thought of the alt reclaiming $1 levels would be a distant dream. Now as XRP tests this crucial $1 mark, questions about its rally sustaining are back on the table. Well, for one, XRP's price recovery was backed by a solid rise in MVRV 60-day, which highlighted an anomaly high values at the time of writing, as per sentiment. This meant that this was in fact a bull run and that long-term holders were finally reaping some benefits out of it. MVRV value for the alt at the time of writing was equivalent to the May 15th levels corresponding to XRP's price top at that time. XRP's return to the overbought zone for the first time since its April price ITH was nothing short of a miracle for the alt's holders. On the downside, since XRP is still down 69.98% from its ITH, RSI in the overbought zone could mean that the price might fall after selling pressure sets in. But as long as other metrics hold up, XRP could still sustain its gains. On this note, looking at the development side gave a lot of reassurance for XRP. A sentiment tweet highlighted how development activity rates for the top cryptos showed continued dominance. Interestingly, however, in a never-seen-before trend, the XRP network was closing in on a higher daily GitHub development rate than Bitcoin, which has rarely occurred. That being said, while XRP's social sentiment didn't highlight any major upticks for the alt, its active addresses peaked to May 15th levels on August 11th. Additionally, development activity for XRP was seeing new all-time high levels at the time of writing. Daily active addresses also held up pretty well along with high trade volumes and rising prices. While everything looked good for the 6th-ranked alt, it will be best to look out for warning signs like decline in the active addresses or low trade candles on high prices, especially keeping in mind XRP's almost 10% price fall on August 12th. It will be crucial to watch important levels like the 80 cents mark. Did you know that 55% of the 100 top banks in the world are using this technology to transfer money? Survey shows 55% of 100 world's top banks have exposure to Bitcoin and other crypto assets. Survey shows 55% of 100 world's top banks have exposure to Bitcoin and other crypto assets. More than half of the top 100 banks are major investors in Bitcoin, digital assets, and blockchain technology-based firms. The world's largest banks are reportedly growing rapidly in their involvement in the trending crypto and blockchain companies. They get involved through early and late-stage financing of businesses and projects within the industry. Blockdata research report shows increasing interest in Bitcoin. A blockchain market intelligence. The Blockdata research outlined a report. From the research result, 55% among the 100 top-ranked banks by AUM are already taking interest in the cryptocurrency sector. AUM means assets under management, a measure of the market value of all the financial assets of a financial institution. This association reportedly includes the bank's indirect and direct investment in cryptocurrency and decentralized ledger technology or their subsidiaries. Blockchain market intelligence research had placed Citigroup, Barclays, and Goldman Sachs among high-ranked backers of cryptocurrencies and blockchain companies. The Blockdata research also identified BNP Paribas and JP Morgan as perpetual investors in emerging firms. The KPMG report states that these investments form part of the bigger trend of good backing for cryptos and blockchain startups. Their funding figures have already started doubling the sum recorded in 2020. The Blockdata research also reveals crypto custody to be the main target for banks that join the crypto industry. Nearly a quarter of the largest 100 banks by AUM are developing crypto custody platforms. Otherwise, they back startups offering digital assets custodial services. Several banks operating in Asia, Europe, and United States build crypto custody solutions as their preliminary thrust into cryptocurrencies. Reason for banks' exposure to digital assets. Blockdata, blockchain market intelligence attributed the increasing banks' blockchain and crypto involvement to three major factors. They include regulatory advancements, very high profits of cryptocurrency startups, and incessant requests from bank customers for maize digital assets. Yan Zhao, NYDIG president, stated that popular crypto trading platforms like Coinbase make numerous returns. This made banks want to revisit their restraint in Bitcoin and crypto involvement. However, this massive return was not affected by the significantly smaller team members working for them, the crypto companies. Coinbase is a secure US-based platform that makes it easy to buy, sell, and store cryptocurrencies like Ethereum and Bitcoin. Survey shows 55% of 100 world's top banks have exposure to Bitcoin and other crypto assets. At the time of writing, the giant crypto trading platform Coinbase is valued at $58.9 billion. This value is almost 50% of the value of Goldman Sachs, despite having just about 4% of its workforce. Goldman Sachs is the 13th biggest bank globally,